Walt Disney Company CEO Bob Iger is signaling that the House of Mouse may be up for a big old yard sale. Let's get into it. Renegade Online. Well, folks, welcome back. Another great day here at Valiant Renegade. It's good to see everybody out there once again. And if you are like one of the many folks watching this video, not yet subscribed to this channel, please take a moment and turn that little red subscribe button to gray. Hit that like button, hit that notification bell, share this sucker out on the social medias, and of course, please do leave a comment before you head out the door today. Now, we've had a number of articles on the Walt Disney Company in the past several weeks since, frankly, it looks like the street has been turning on the Walt Disney Company, at least in terms of their long-term feelings. We've seen articles from places like the Wall Street Journal, from Forbes, from Motley Fool, from The Street, from so many others out there. And this one today from Bloomberg. This actually came out Sunday as we were doing the live show around that time. Did not have time to prepare for this, but you get the basic idea. Bob Iger shifts from building an empire to a Disney yard sale. Netflix just had its best month in years, and Disney is looking to sell television assets. What does it mean for the future of Hollywood? Now, this top line right here showing that Disney extends CEO Iger's contract through 2026. Now, technically, that is correct. They have extended him through the end of 2026, previously the end of 24 as Disney CEO. But as I reminded folks in a previous video, Bob Iger is really at Disney until 2031. He had an advisory contract that was put in place for 5 years before he left the first time when Bob Chapek took over. That contract was tolled, meaning it had the pause button slapped on it, and he only had about 4 years and 1 month and maybe 2 weeks left beyond that point. But in this new deal extending him out to 2026, they reset the whole 5 years. They gave him the 11 months back. Bob Iger's not going anywhere till the end of 2031. And just to remind folks, it was Bob Iger hanging around in the Disney C-suite, in fact, in his own office, that he wouldn't give up to new CEO Bob Chapek, and sticking behind the scenes and just muddying up the works for Chapek. Now he's back. Whoever's going to take over Disney when Bob Iger's gone is still going to have to deal with Bob Iger for 5 more years. And you wonder why they're having trouble finding a successor. Ugh. Now, the initial part of the article tends to loud praise onto Netflix for its growth with its advertising side of things. Still a few years away from maturity there as it builds. Also, the password crackdown has been a big hit for Netflix. Whether folks have liked it or not, it has increased subscribership globally by several million. So hopefully that is going to continue for them. But then the article turns to Disney here, and we can see this next section. Bob Iger shifts from building an empire at Disney to a Disney yard sale. Bob Iger built Disney into the world's most powerful entertainment company by acquiring Pixar, Marvel, and Lucasfilm. Now, he's looking to downsize. Bob Iger put roughly a third of the company up for sale this week, declaring Disney's linear TV assets as non-core. That includes TV networks ABC, FX, and Freeform. He also said that Disney is looking for a strategic partner for ESPN, though he's not willing to sell the whole thing. And the company is already looking to sell or restructure its TV and streaming business in India. We've talked about some of this before. Disney selling off the HotStar system in India, probably a good move. And as I've suggested before, I think one of the best matches for that is the Paramount conglomerate that bid and won the rights to stream the IPL, the cricket league that was so popular in India, that Disney once had on HotStar via the Fox acquisition back in 2019. I think they would love to have the broadcast rights that Disney did re-win about a year ago when Bob Chapek was still there and bidding on it. But maintaining a streaming service for Disney in India is long-term probably a losing battle. The rates that they are able to charge people there for both advertising and subscription fees is a mere fraction of what they do in their core markets in North America and Western Europe, and even many Latin and South American countries. The average revenue per user for a HotStar subscriber is less than $1 a month, and it's shrinking. And fortunately for Disney, Wall Street has finally wised up and looked for more value and profitability from streaming services rather than just pure sub numbers, because it doesn't matter if you have 200 million subs for your streaming service If you're still losing billions of dollars each and every quarter, you've got to trim the fat, and obviously that's where Disney is going at this point. Back to Bloomberg, it's a stunning, if inevitable, turn of events for an executive who spent so much of his career working in television, and for a company, Disney, that relied on cable networks for the majority of its profit. Before the pandemic, Disney's media networks generated 35%, or $24.8 billion of total company revenue, and more than 50%, or $7.5 billion, of its operating income. Yet the accelerating decline of cable TV has limited Iger's options. He thought he'd solve this problem with Disney Plus and Hulu, but his two mass-market streaming services. His streaming business is expected to register a loss of about $800 million in the company's just-ended third fiscal quarter. And that earnings report, of course, will be coming up Wednesday, August 9th. We'll be covering it here on the channel. Management chased streaming subscribers at unsustainably low prices to goose the launch of Disney Plus in 2019 and is now seeking to raise prices without alienating those customers. Disney Plus lost 4 million subscribers last quarter. To be clear, the overwhelming majority, if not all of those losses, came from India. Bob Iger put up a for sale sign on Disney during an interview with CNBC in Sun Valley, Idaho, home to the annual summit of the media and tech elite organized by investment bank Allen & Company. The conference has long served as an incubator for some of the media industry's most high-profile deals and a source of endless photos of executives walking in Patagonia vests. It's not yet clear how serious Iger is about selling entire TV networks. ABC, for example, is key to retaining NBA rights. FX has been a key supplier of programming to Hulu, which Iger plans to keep and fold into Disney+. Yet Iger's CNBC interview was unmistakably a distress signal. Disney is contractually obligated to buy Comcast Corp's one-third stake in Hulu in a deal that would value the business at least $27.5 billion. It's also wrestling with a colossal debt pile stemming from its $71 billion acquisition of Fox back in 2019. A sale of the TV business could fetch around $8 billion, according to Wells Fargo analyst Steve Cahill, which would largely offset the cost of acquiring the piece of Hulu it doesn't yet own. Most of the potential suitors for linear TV networks are financial entities like private equity firms that would milk them for cash as they decline into obscurity. Now, there's a lot going on right there, so let's break it down piece by piece. As I mentioned before, selling things like HotStar would definitely be in Disney's best interest long term. It can bring in some ready-made cash and sold to the right buyer, like that Paramount conglomerate that's already deeply embedded in India now with those streaming rights to IPL. Disney could turn a pretty penny on that one. Now, when it comes to ABC and FX and a lot of the linear broadcast television networks, it's a double-edged sword. The $8 billion figure that is coming from this Wells Fargo analyst is probably largely factoring in the retention of those live sports contracts, namely the NBA. But as Bob Iger has made very clear, live sports are considered part of a core of Disney programming, as are potentially some core pieces of programming on those linear broadcast stations. Now, the delivery system itself is the problem. Cord cutting, cable, over-the-air television, they're all on the downslide. Now, what isn't is streaming, and that's continuing to grow. And Bob Iger wants to get a lot of those programs over to the streaming side, especially live sports. So then, if you take the most valuable aspects of things like ABC and FX and so on and so forth, and Disney retains that to keep into their streaming services, then probably that linear broadcast system is not worth $8 billion. In fact, it's probably worth a lot less. That's the big problem they really have to get over. What does Bob Iger actually get for this if he sells it the way he probably wants to? And then, who actually wants to buy this? There's, of course, several potential suitors out there, but once we start figuring in regulatory scrutiny and pressures, that list gets whittled down rather quickly. Think about Comcast Universal. They've already got NBC. How about Paramount? They've already got CBS. How about Fox? They've got a linear station as well and a broadcast television station. So that's three big entertainment companies that cannot possibly take ABC because that would invite not only scrutiny from the Federal Trade Commission or the FTC, but also from the Federal Communications Commission or the FCC that would absolutely get involved because there's no way a company like Universal or Paramount could possibly own two major over-the-air broadcast networks. You have to ask yourself, is Bob Iger trying to sell ABC and FX right now to help shore up the balance sheet for Hulu? Yes, that could definitely help, no question about it. Or is the bigger issue for the Walt Disney Company trying to sell these assets right now while they're actually still worth something? Because 5 years from now, things like ABC and over-the-air broadcasts might be worth squat. So as the article suggests, maybe some private equity firms that could milk it down to nothing. But then again, why would the FCC potentially grant that sale or the permission of that sale to go to a private equity firm? I think the FCC is probably much happier with having these massive national publicly broadcasted networks owned by publicly traded companies. But the landscape is changing and the potential suitors for a deal like this are shrinking quickly. Would an Apple or Amazon really want to jump in to buy a set of linear stations, especially a broadcast network like ABC, inviting a new regulatory body like the FCC into their business? I kind of doubt it. Now, if Amazon was able to get their hands on the lucrative NBA contracts that Disney would have to sell with it, that might be a different game altogether. And somebody like Amazon would have enough capital to buy an asset like ABC with the sports contracts and then basically throw the broadcast out of the window and take everything to streaming. Of course, they'd have to work a deal with the NBA to make that happen, but they probably could do it. But again, Disney seems unlikely to want to part with those lucrative sports contracts. They want to keep those in-house. They want to get those to ESPN as quickly as possible. So this makes everything a giant mess. Now, of course, the article can't get away from long, swirling rumors that, here we have it, that Iger would wind up selling the entire Walt Disney Company, lock, stock, and two smoking barrels, to Apple. And it's still hard to imagine Iger selling Disney to anyone, says Bloomberg. And I would wholeheartedly agree. He was always a builder, not a seller. But Bob the Builder is doing a lot more cutting this time around. Now, I've given you my thoughts on Disney selling to somebody like Apple or even Amazon or anybody else out there. There are very few financial suitors that could take on something this big. And of course, the regulatory scrutiny would be overwhelming from the Federal Trade Commission. It would be highly unlikely that such a deal would be allowed to go through if Apple were to say, buy Disney outright. The FTC would likely force Apple to sell off massive chunks of Disney to different entities in order to get through antitrust scrutiny. I don't know if they'd want to go through that. I don't know if Apple wants to play that game. I don't know if Disney wants to play that game either. And I do tend to think at the end of the day, as we've stipulated so many times, that Bob Iger is a man of legacy. And having spent so much time in the last 15 years acquiring assets, building the Disney brand in terms of its global footprint and all the different studios and facets that it operates in, seems unlikely to just want to sell that off at this point, because I think people would look at that as a sound defeat for Bob Iger, an admission of failure. And that's something that Bob Iger probably doesn't want to do, especially at a time when Disney is at one of its worst financial moments in history. It's a mess in the House of Mouse, and it's all Bob Iger's doing. Yeah, it didn't take long for Wall Street to get away from the Bob Chapek screwed everything up mindset to realizing, most of this was Iger's fault. Wait, no, all of this was Iger's fault. Yeah, it really was. And that's where we are, folks. But let me know what your thoughts are in the comments below. Do you think Disney is going to sell off to somebody like Apple? And if they try to strike a deal, do you think the FTC is actually going to approve this as it would be? Or would they have Disney stripped apart and sold off in pieces to other people in order to effect the sale? And if that happens, is it worth it to either party to make that happen? What do you think about ABC and ESPN? Let me know, again, with your thoughts in the comments below. And until next time, make sure you hit that like and subscribe button and take care.